Hi everyone, and thank you so much for watching my channel, the Witty Turtle. So up to the last class, we have completed section 37, right? Up to section 37. From today's class onwards, we are going to start with section 40, right? So let's understand section 40 deals with what all provisions, right? So the amount which are specifically not deductible under section 40, there are certain amounts which you are paying, or there are certain amount of expenditure which you are incurring for your business, but they are categorically not allowed, they are disallowed, they are not allowed under this particular section, that is your section 40, right? So the first section that we are going to study in this is section 40, clause A, subclause I. Okay, section 40, clause A, subclause I. So this particular section speaks about non-compliance of provisions of TDS where payment is made to non-resident. Okay, so this particular section says that the cases where you are making any payment or any credit to the non-resident or any foreign company, and if you have not deducted the TDS, or you have deducted the TDS but you have not deposited the TDS amount to the government within the due date, okay, within the due date of return filing, right? So in that case, what happens, 100% of the total expenditure will be disallowed in hands of the SSC, or in hands of the company. Okay, understood? I hope this is clear. So let's understand this section in more detail. So here the first thing that we need to understand is that what kind of amount are you paying to the non-resident, or to the foreign company, right? Any kind of fees for technical services, any kind of royalty, any kind of interest, or any other sum which is chargeable to tax under Income Tax Act, right? If you are paying any of these amounts to a foreign company or to a non-resident, either outside India or in India, so in that case it will be 100% disallowed if you have not deducted the TDS in the previous year, or if you have deducted the TDS but you have not paid or not deposited the TDS amount to the government before the due date of return filing, right? So in that case 100% will be disallowed, right? Now here another small provision is given which says that where the tax has been deducted on any subsequent years, right? For example, in any of the next upcoming years, if the tax is deducted, so in that previous year, if the tax has been deducted, but it has been paid after the due date of return filing, after the due date of return filing, then such sum shall be allowed as deduction in computing the income of the previous year in which such tax has been paid. So in simple language, it says that previous year in which the TDS has been paid to the government, the TDS has been deposited to the government, in that year it will be allowed as deduction, right? So let's make it very clear with a small example. Now look at the following example. Mr. A is the payee. Okay, he is a non-resident who came to India and he was paid 20 lakhs. For example, he is a performer or he is a star or something, and he came to India for a show where he charged rupees 20 lakhs, and he was paid the 20 lakhs on 31st December 2021. 31st December 2021, right? And on the very same day, TDS has been deducted. TDS has been deducted from his amount, but the TDS was deposited to the government. Now look at the chart given in the right side, where the deposit date is given, and now you have to decide whether it will be allowed or not, right? And the point to be noted is that due date of return of filing is your 31st October 2022, right? 31st October 2022 for the SSC, and in this case the SSC is a company. Okay, so now for example, the TDS was deducted on 31st December 21, but look at the first case where the TDS was deposited on 7th January 2022. That means exactly after 7 days of the amount paid to him, right? After 7 days of the amount paid to him. So in this, what happens? It will be allowed in which previous year? It will be allowed in the previous year 2021-22, right? 21-22. Now look at the second case. The amount of TDS was deposited to the government on 15th of April 2022, right? 15th of April 2022. So this particular date is before the due date of return filing, right? Before the due date of return filing. So yes, it will be allowed in the previous year 21-22. Now look at the next case where the amount was deposited on 15th of October 2022, which is again before the due date of return filing. So here it comes. It will be allowed in the year, in the previous year 21-22. Now in the next case, right, the amount was deposited on 16th of December 2022. 16th of December 2022, right? So ये कौन से year में हो जाएगा? This will be allowed in the previous year 22-23. See, you simply need to understand whether it was paid in the particular previous year before the due date of return filing or not, right? Before the due date of return filing or not. uh, it will be allowed in that previous year in which it was paid to the government. And the second condition that you need to check is whether it was paid before the due date of return filing or not, right? Now look at the next case where it was paid on 15th of March 2023. So again, it will be allowed in which previous year? Obviously in previous year 22-23. Now coming to the last case where it was deposited on 16th April 2023. So it will be allowed in which year? Previous year 23-24. Why? Because it is a subsequent year in which it is being deposited, right? It is a subsequent year in which it is being deposited. So the reasoning is that why here in this case on 16th of April 2023 it has been deposited, but it will be allowed in the year 23-24. The reason for that is that as it is being deposited after the due date, right, after the due date, so the day on which it has been deposited to the government, that day falls in whichever previous year, this kharcha will be allowed in that previous year. I hope this is clear. Yes. Now, another similar section is there, which is very similar to this, which is your section 40, clause A, subclause IA. Okay, subclause IA. So this particular section speaks about non-compliance of provisions of TTS where the payment is made to a resident. Okay, payment is made to a resident. So in that case, only 30% of such amount will be disallowed. Right, will be disallowed. So here what does it say? It says that any amount is paid or any amount is credited to a resident, and if TDS is not deducted in the previous year, or the TDS has been deducted but it is not paid to the government, or it is not deposited to the government up to the due date of return filing of that previous year, right? So in that case, what happens? 30% of such sum shall be disallowed in current previous year, in the current previous year. In the earlier section, when it was for non-residents and foreign companies, it was 100% disallowed, but in case of resident, it is 30% disallowed. Now if you are thinking why that was 100% and now this is 30%, so we will come to that after understanding the entire section. Okay, in this section also, it says that if TDS deducted in subsequent year or deducted in previous year and paid to the government after the due date of return filing, if it is being paid after the due date of return filing of that previous year, then such sum, which is 100% in the previous case and 30% in the current case of a resident, shall be allowed as a deduction in the previous year in which such TDS has been paid to government, right? uh, See, simply you need to remember is that if the due date of return filing of that particular year, that particular previous year has been expired, and if after that you are depositing the amount of TDS to the government, so in that case it will be allowed in that previous year in which previous year you are depositing it to the government. If you are depositing it to the government on 16th of April 2023, then it will be allowed in the previous year 2023 24, right? I hope this is clear to you now. Okay, so as I already told you that why is it 100% for non-residents and foreign companies, and for residents it is 30%. Simply, now look at the following thing. For non-resident, what is the general TDS rate? It is 30%, right? So for example, if you are supposed to pay 10,000 rupees to a non-resident, so in this case, how much TDS you are supposed to deduct? 10,000, 30% is 3,000 rupees, right? So if you have not deducted the TDS from the non-resident, and or if you have deducted the TDS but you forgot to pay it to the government, so in this case what happens, the government has to suffer a loss of 3,000 rupees, right, in the tax revenue, right? So uh, because it will be considered as a loss for the government, because once the non-resident is gone out of India, so it is very difficult for our government to collect tax from him, right? So in this case what happens, income tax provision has been made that the entire 10,000 will be disallowed in our hands, right? So what happens, our net profit will be increased by 10,000, right? Our business income will increase by 10,000 rupees, and we know that in business income we generally give the tax at a rate of 30%. So again, as our income has increased by 10,000, and on that 10,000 our increased tax liability will be how much? 3,000 rupees, right? So government will recover that 3,000 amount from us only, from the SSE only, right? This is clear. Now coming to the next point, that is your resident. Why is it 30% for resident, right? So TDS rate on a resident is 10%. Generally it is 10%. Now, if we are supposed to pay 10,000 rupees to a resident person, then in that case, we are supposed to deduct 10% of TDS on that, right? So 10% of 10,000 will be how much? 1,000 rupees. Now, if we forget to deduct TDS, or if we forget to pay the deducted amount of TDS to the government, so in this case, how much amount of loss the government has to suffer? 1,000 only, right? 1,000 only. uh, so now government did what? Government said that from the entire expenditure, 30% will be disallowed in our hands, right? So 30% will be how much? 10,000. 30% is that 3,000. So our business income will increase by 3,000 rupees. Now tell me, if we are supposed to pay the tax, then at a rate of 30% business on business income. So now tell me, how much our tax liability will increase? Our tax liability will again increase by 3,000 into 30%, that will be 900 rupees, which is approximately 1,000 rupees, right? I hope this is clear. Hence, in case of non residents and foreign companies, 100% of the expenditure is disallowed. Whereas, if you are paying or if you are crediting to any resident person, then in that case, only 30% will be disallowed, right? This is clear. Now you must have studied in the TDS chapter that if a person, if any SSE has forgot to deduct tax, deduct TDS before the due date, then in that case what happens? He will be called the SSE in default, right? It is mentioned in section 201 and I think also in section 202. So a very similar or very related provision is given in this particular section also, which says that uh, now look at this particular example. Okay, so in this example what happens, X Limited is a company and Mr. A is a resident, and X Limited has paid some professional fees of rupees 3 lakhs to Mr. A on 16th of July 2021, right? So in this case, Miss X Limited is supposed to deduct TDS on the very same day where he paid to Mr. A, right? So TDS was supposed to be deducted on 16th July 2021, but X Limited forgot to deduct TDS. So the TDS was not deducted on 16th of July 21, right? Now look at the professional fee amount, that is your 3 lakh rupees. So as it is a professional fee, so TDS under section 194J at a rate of 10% will should be deducted. So what will be the amount of 10%? 30,000, right? 3 lakhs का 10% कितना होगा? 30,000 हो जाएगा. So as the TDS was not deducted and it was not paid to the government, so in this case what happens? 30% of the entire expenditure will be disallowed. So what is the 30% of 3 lakhs? 90,000 will be disallowed, right? 90,000 will be disallowed. So in this case, now what happens? uh, in this case, the X limited should be the SSC in default if we go by the provisions of section 201, right? But in this case what happens? Mr. A, who is a resident, he tells that I will consider this 3 lakhs in my income and I will pay tax on it. And Mr. A does what? He pays tax on 3 lakh also, and he furnishes his return of income on he files his return of income on 20th July 2022. 20th July 2022, right? So in this case what happens? In this case X limited will not be SSC in default by paying interest. In this case the X limited will not be considered as the SSC in default by paying a certain amount of interest, right? Now let's read the provision for this, and after that we will come to the interest amount. The provision says that X limited has to pay interest under section 201 subsection 1A on a per month basis on the amount of TDS not deducted from the date on which TDS was deductible. The date on which TDS was deductible was 16th July 2021. Okay, till the date on which the payee or the or Mr. A, right? He is the payee here. On Till the date on which payee furnishes his return of income. So in this case, the interest amount will be charged from which date to which date? From the date on which the TDS was supposed to be deducted up to the date on which the payee or Mr. A furnishes his return of income, right? Between all these period, the company X limited has to pay the interest for all these months, right? This is clear. So yes, so if X limited pays the interest amount, uh, so X limited will not be considered as a SSC in default. Now, another thing the X Limited has to do is that X Limited has to furnish a certificate from a chartered accountant in Form 26A. In the Form 26A, so this form means what? This form says that the certificate should mention that Mr. A, who is the payee in this case, has considered rupees 3 lakhs in his income, and he is supposed to pay tax on that, and he has also filed his return of income on such date, right? This particular certificate from chartered accountant in Form 26A is supposed to be furnished by X Limited or the payer. Okay, I hope this is clear. Now the question arises that okay, now first understand that in this case the what was the TDS amount which was supposed to be deducted? 30,000. So the interest will be paid on 30,000 only. So the interest at a rate of 1% in this case is being paid for how many months? You calculate, that is from 16th of July 2021 to 20th July 2022. So if you calculate it, then it will be 13 months. Okay, so for 13 months the interest has to be paid. So the interest amount will come as 3,900 rupees. Okay, understood? Now you must be thinking why interest is being charged. Because the government was supposed to receive this 30,000 on 16th July 21 in the last year, right? So if government had got the money on the very same day, then government would have invested that amount, right? And the government would have generated more income out of that. But in this case what happened? The government could not receive such amount. So uh, obviously the government will recover some amount of the investment loss, right? So For that reason only, government is charging income tax. Government is charging interest on the TDS amount which was deductible on the very first day. Right? I hope this is clear. Now you have to do what? You have to go through the legal language, which says that section 201 provides that the payer, okay, in this case, who is the payer? The payer is X Limited, who fails to deduct the whole or any part of the tax on the amount credited to the payee. Payee is Mr. A. So it says that X Limited forgot to deduct TDS on the amount paid to Mr. A shall not be deemed to be a SSE in default. So X Limited shall not be deemed to be a SSE in default if such pay, which means if Mr. A does three things. What is the first thing? Mr. A has furnished his return of income under section 139. Second point says that Mr. A has taken into account such sum for computing income in such return of income. That means he has considered 3 lakh rupees in his income, or he has added rupees 3 lakhs in his income. And the third point says that Mr. A has paid the tax due on the income declared by him in such return of income. So Mr. A has also paid tax on rupees 3 lakhs, right? If all these three conditions are satisfied, then what happens? X Limited shall not be considered as a SSC in default. Okay, but for that, X Limited, who is the payer, has to furnish a certificate from a chartered accountant in Form 26A, right? Now, the date of deduction and payment of taxes by the payer, which is X Limited, shall be deemed to be the date on which return of income has been furnished by the payee. Okay, the date of deduction and payment of taxes by the payer shall be deemed to be the return filing date of Mr. A. Right? This is clear. Now everything is very similar. Whatever is there in the law, which that we have already studied in this particular class, right? So that was it for today's class. I know this has become a very long revision lecture. So yes, after this, you just simply need to revise this particular chapter from your book, and after that, you can solve some questions if you have any question bank. And yes, you are good to go with this particular chapter. If you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and yes, also don't forget to share this video with your CA and CMA final friends, CMA inter friends also, and yes, uh, also hit the bell icon so that tomorrow you'll be notified when I'll upload a new video. And very soon we are going to complete PGBP.